Welcome back, folks. Today we're going to be talking about the 1 hour model and then the 4 hour model. This will help to tie into the higher time frame order flow and basically how I can get a bias for the day or the week, depending on what's going on these time frames. So starting off with the 1 hour, we want to see a 1 hour CISD, meaning we want to see a breaker, right? Then we want it to print the sweepable, which is here. Then we wanted to sweep that sweepable, meaning go below it or above it, depending if you're short in or long in. And then here on this leg, we wanted to create a 15-minute breaker to start off with. There will be, of course, a 1-minute breaker. There will be, of course, a 5-minute breaker. But to be the most reliable on the 1 hour model, you want to be using a 15-minute breaker to really get the bias. Now, this does mean that sometimes you won't know that the change in state of delivery in the higher time frame is happening till it has already confirmed a higher time frame. That means that you will miss some other profits that are down here. That's okay. A lot of the times this happens during the Asia session and the London session. So we typically speaking are kind of already ready to roll by New York. Or if it does happen in New York, it usually tends to be something that's a little bit more explosive and it will deliver the leg the day of New York. So it's okay for you not to be on the very, very start of it. Now, of course, there is ways to know that this is going to happen on the lower time frames, like the 5-minute model or the 15-minute model on its own. If you have something here on the leg that was left over, that gives you the hint that it's going to turn around here. But for the most part, starting off, you just want to be able to watch this. You don't have to take action on it. Just seeing it is enough to understand the basics of it. And then eventually you can try to get on the lower time frames and do stuff there. But for the beginning part, just watch it, let it do its thing, and let it tell you where price is going to go. And then get on the moves after this has already been confirmed. The moves are going to be there. They're not going to leave you. We don't need to feel FOMO when the move happens. There will be more moves that will come. So anyways, 15-minute breaker. And then, of course, you want that 15-minute breaker to become an hourly breaker and so on. Because we are, again, attaching ourselves to the hourly expansion. So this is the hourly, right? Let's say this is the new hourly breaker. So our 15-minute breaker, usually it's somewhere close to this. Sometimes it overlaps, so it will be the same. If it's the same, that's okay. We still target the same stuff. Now, I don't ever actually enter a 15-minute breaker. Like, you don't see me taking an order that's, this thick. That just happens because I'm usually on the lower time frames getting the smaller orders. If I'm not in this already, I'll get another entry later on. But this will help me figure out where the overall trend will be going to, what those projections are. So then when I get on the lower time frame entry, I can feel more confident about the fact that it is going to go to 4 standard deviations and so on. The second type of entry is when you have the hourly CISD, meaning the breaker, the sweepable. We sweep. We create the 15-minute breaker here on this leg. And as we're creating that 15-minute breaker, we get a fair value gap on the hourly time frame. Now, that fair value gap gets traded back into or retapped here. And it either retaps, lightly, or it goes to candle 1. Either way, it will be fine. And then here on the lower time frame, on the 5-minute, it will create now a fractal breaker. And this breaker is a new order. So if it's just a sweep, 15-minute breaker is what we look for. If it's a sweep, 15-minute breaker plus a 1 hour sheep fair value gap, then when we retap that fair value gap, we no longer need a 15-minute breaker. A 5-minute breaker will work just fine. The win rate on it is very high still, and you don't have to worry about anything else. Like this is a really good entry. And the reason why is because everything is already primed for that explosive continuation that's getting ready to happen. So those are the two type of entries. There's nothing else. There's not a hourly sweep and then let me go on the 1 minute and get a breaker. I'm not saying that there isn't. Obviously there is. For there to be a 5-minute breaker and a 15-minute breaker, there has to be a 1-minute breaker that happens. Like, that's obvious. But you don't want to be trying to chase that, because it could be literally 5 different 1-minute breakers until finally the 5-minute goes and pops, or the 15-minute goes and pops. So you need to understand that if you try to do something like that, yeah, you might be able to catch it, but you're also going to take multiple losses on the way of catching that. So how many would you take till you're done? Like, that's the real question. All right, awesome. Let's move on to the 4-hour model. All right, cool. We're back. So the 4-hour model is the same thing. 4-hour changes to the delivery. So same image. You then get the sweepable, same thing. You get the sweep, and then you get a 1-hour breaker here. So it's the same principle. You just moved all the time frames up one from where we were before. For the fair value gap entry, is the same thing. 4-hour CISD, 4-hour sweepable, 4-hour sweep, 1-hour breaker, 4-hour fair value gap. We retap into it, and then we just need a 15-minute breaker. We don't need anything more than that. Now, ideally, this 15-minute breaker becomes an hourly breaker, and then that becomes a 4-hour breaker. So again, it's the same principle. You're just doing the fractal time frame of this. Now, I love this 15-minute plays from this 4 hours basis or CBIS. They're super explosive, and they tend to deliver to 4 standard deviations. That's also why I was pretty confident about the projections that we have here from Friday to deliver all the way to where we need to go, which is up here for the projections. We can go over that example later. But yeah, I'm super confident about that. And it's because these plays are super explosive. Okay. So I'm going to get into some examples just to kind of show you guys what it looks like and how you can utilize this on your operation to basically figure out a bias. Now, some of this stuff, it's going to be a little bit difficult to spot it in the beginning because depending on the market conditions, it might be very, very obvious, or we could be shifting. And if you are a little too early, you might think we're shifting, but we're actually not. We're just pulling back. So we're going to talk about the 4-hour sweepables a lot because the model, just by the nature of it, of course, is going to print sweepables in the same area that it could be a breaker for the opposing side. So one of the questions I get a lot by students is this a sweepable, or is this going to become a breaker that we want to utilize to go the opposite direction? The answer to that is not always it's one or the other. The answer to that is it could be both. That's not a bad thing, okay? Because this is a higher time frame, okay? So if it's a higher time frame, that means that the lower time frames will have entries that will drive us towards those sweepables, because those sweepables either, again, will become a breaker for the opposing side, or it will sweep, fail to go, to keep going, and then it will reverse. So either way, those highs and lows are very, very attractive for liquidity. Like, those are the highs and lows that when you see them, you're like, I know we're going there. And it doesn't matter if I'm bullish on the week, if I'm bearish on the week, we're going to go there eventually. And I want to be part of that move. So how can I get involved in that? And that's when you drop down to the 15-minute, the 5-minute, and so on. And you start targeting those areas. And, that's the easy bread and butter type of setup. That's the ICT always talks about, like, the meat and potatoes. That's the meat and potatoes to me, because it doesn't matter what we want to do long term. That high, to me, in my eyes, is going to be liquidity. Whether we create a breaker and continue there a million points above it or below it, it doesn't matter to me. That high is where I want to get to. And after that, I'm done. I don't have to catch anything else because I already caught the move from wherever we were up until that high or that low. So yeah, let's look for some examples and try to break them down. All right, awesome. So this is all-time high here on NQ. I just did the replay so it eliminates all the other bars that it would take us back on. But there was a really good setup here back in all-time highs that I was involved on for the Discord. And this is pretty much near the time that I started teaching my model publicly. So yeah, let's go over it. So it's a 4-hour CISD, or change set of delivery, breaker, whatever. Low, high, low, higher, high, lower, low, giving us our breaker block, which would be this big red candle. Now, once we have that, we look for our sweepable, which is low, high, low, giving us our sweepable here for the first time. We'll zoom in there just a second. I already know that there's no valid play there, but yeah, we'll zoom in a second. So 2 sweepables, and then we get the CB, right? And then we'll zoom in on the CB. Sorry, I completely forgot to turn this on. Now you can actually see what time frame I'm on. Somebody give me some feedback that I should probably be utilizing that. So Yeah, so 4 hour would be 240 minutes, and then 1 hour would be 60 minutes. Okay. So, anyways, so once the sweep happens here, what are we looking for? We're looking for a breaker to the downside on the hourly. Okay. So, is there a breaker to the downside here on the hourly from this high? Again, this is the highest probability side. No, the answer is no, there isn't. So, we move on, we go higher, and this is a fresh sweepable. There's no bullet spent on this. Once we go higher, is there a breaker to the downside? Yes. High, low, higher, high, lower, low, giving us a breaker on the hourly. Now, along with that breaker, we get a CB, which was on the 4-hour time frame. Now, what's the entry? The entry is 1 hour breaker, and the second entry is the CB play. So the 1 hour breaker looks like this. Obviously, this is not something you're going to trade for prop firms because you would have to swing. On personal accounts, you could take a trade like this. But for the most part, you're going to be utilizing this just to gauge where price is going. Once you know where price is going, you can catch the fractal entry on the 1 minute or the 5 minute, and then you can actually get crazy risk to reward with this. So let's go into the 15 minute on the same area. And let me delete this colors. Okay, there we go. All right, so same area, but when we start working ourselves back up into the CB, which is right here, this is the first time we tap into the CB. This is part of the 4-hour candle. So this is the first time we tap into the CB. Is there a 15-minute breaker? No, there isn't. We work all the way back to candle 1. This upper area here is all candle 1 on the 4-hour. So the same rules that I have on the 5-minute model, same rules that I have on the 15-minute model, they all apply to the 1-hour model. They all apply to the 4-hour model. It's the exact same thing. There's no difference. So once we work back up into this high, we tap into it, and then we start to look for a breaker to the downside. Remember, this is already an hourly breaker. So these projections are already in play. We hit 2, 2.5, then we pull back to where we started from. We tap into the first candle, and now we're looking for the next entry. Well, that next entry comes right here, right? So we have high, low, higher high, and then lower low across on this candle right here at the 8 o'clock hour from Asia. So now this breaker on the 15-minute is active and it's ready to roll. The projections on this are all the way down here. And so we know if it's a 4-hour CB or BC with a 15-minute breaker, it's very, very likely to go to 4.5 standard deviations. And this moves will look crazy because the projections can be super big relative to volume. I mean, look at this projection. It's huge relative to what we were doing prior to that on a daily basis. I know this day is crazy, but prior to that, we weren't getting moves like that, like at all. Like the expansions are definitely nowhere near as big. But even then, it can still deliver. So now we get this. This is the 15-minute. This is where you would start using this model to then get a lower time frame entry inside of this price action. So you would go on the 5-minute and you would literally start hunting a trade on the 5-minute or the 15-minute, depending on, what's going on. Like the 15-minute here in the same area, after the CISD here, this is the first sweepable that it gets, and there's nothing else. So you would have had to go on the 5-minute and start hunting a different trade. Now that different trade comes, I believe it was right here. Oh, sorry. It's right here. This CB is valid. Let's go over it real quick. The CB is valid because we have CISD. Where are you? No, we have a CISD here. Hold on. Okay, awesome. This is where it was. All right. So if we zoom out, go to the left, this is Thursday in the morning, and then this is Thursday at night. So again, look back period on the 5-minute is 2 days. This will be within 2 trading days. So we have CISD here, high, low, higher, high, lower, low closing here, giving us this high as the sweepable, and that sweepable, we can zoom in on it. And if we zoom in after we have the sweep, we then get our first breaker to the downside. So now this breaker would be a fractal of the overall move. When you catch this, you don't have to TP at -4 if you have a higher time frame projection that should deliver for more. Now, what I'm teaching is go ahead and TP at -4 on these moves for now, but be aware of them watch them, take notes on them. That way, in the future, you can capitalize on some of these moves, because the moves get really crazy when you start doing the higher projections. And I'm not saying you're going to go and catch the full 15-minute projection. I mean, you definitely can if you want to, but it's not realistic for a lot of people to actually go and try to do that. But at the very least, 4 standard deviations would have given you obviously the 4R. And then if you would have went for 2 standard deviations of the 15-minute projection, you would have gotten 14R out of this trade. The total R, if you would have went for the full 4 standard deviations, would have been 30R on the trade. So yeah, this is a pretty good example for the 4-hour model. Let's go into a 15-minute example. Sorry, I didn't mean a 15-minute. I meant an hourly example. So after the projections are done for the move to the downside. Okay, so after that move is done, remember 4 standard deviations was right here. I just have it to where my chart doesn't show me like pips from other time frames. But the projection was done here. So typically what we expect is a pullback, right? And that pullback is typically going to be to 2.5 standard deviations, give or take. And so now let's look into the left side. The left side has low, high, lower low, higher high, lower low, giving us a breaker, a brand new breaker on the on the hourly time frame. So now we go to the low. We look for a high that has a low. That gives us our sweepable. So then we mark that out and let's put hourly. And so now when we get above here, we're looking for a 15-minute breaker to the downside. Now that 15-minute breaker, we ideally want it to be a possible future 1-hour breaker. So in this case, what do we have? Low, high, but it doesn't have a low attached to it. So it's actually low, high, right? And then lower low here. So let's drag that across, put CISD like so. And now let's zoom back out to the hourly. That exact same low is the same 15-minute breaker. So it's both at the same time. It's a 15-minute breaker. It's also on a 1-hour breaker. Now, this is Friday. When it confirms this, it's Monday already, and the day gets going. Now, how can you use this projection from this top to this bottom? Well, you know that this is very likely to be delivering at some point. It can be today. So if you target today, well, then you target today. But it can be the next day or, a week from today. It's up to 5 days. The look back period, which I totally forgot to mention, I'm sorry. On the hourly, it's 5 trading days. The look back period on the 4-hour is 10 trading days. Meaning within those 5 days, if this setup didn't happen or the sweepable didn't happen or the fair value gap didn't get tapped into from the moment it was put on the chart, then it just diminishes the probabilities for this to actually work out. It doesn't mean that it cannot be used in the future ever. And I'm not saying you're never going to see a reaction ever again from that area. It definitely can. But the probabilities of it actually being a move that's sustainable and good just heavily diminish. So with this, you're going to be looking for the 2 standard deviations and then the 4 standard deviations. Now, in this case, on Monday, it reached 2.5 the same day off. So 7, 8, 9, massive drop. And then we start pulling back and then we just move sideways. Now we're going to fast forward till the end of the week because I would just want to show where the week ends and then we'll turn back around. So this is Monday of December. This is Thursday of that week. Wednesday was a holiday. It was the 24th. No, sorry, the 25th. So it's a holiday. And yeah, so we go from the top to the bottom. This is the very first breaker on the higher time frame for the week. And literally it gives us 4.5. And then we turn around from there. And then we start going all the way back up. So these projections, again, can be used intraday or they can be used, for higher time frame projections. Like, okay, this 4-hour projection is going to happen. Well, I'm biased now on the 4-hour for however long until that delivers. So for example, here, if you're following this and you get this projection from the 4-hour here, well, now you can be bearish until this 4-hour actually delivers. Now, it doesn't mean there won't be pullbacks. And that's what I want everybody to understand. There will be pullbacks. There will be moments where it will go back up and do whatever it needs to do because the chart is not linear and it leaves things behind. For example, here, after the CISD on the 4-hour, it then leaves this sweepable behind. And the sweepable never gets tagged till the end of the week. And then what happens after it gets tagged? Well, price goes up higher, right? It goes up here, and then it comes all the way back down, and it does it literally all over again. Now, when it does this, keep in mind, this was the 4-hour sweepable, right? So we're looking for a 4-hour sweepable, 4-hour CB. Well, what do we have here? This is a 4-hour CB right here. There's a volume imbalance right here, and that's why we include this portion of the leg. Well, what do you think happened in that? 4-hour CB, 15-minute breaker. What do we have? 4-hour CB. We tap back into it. 15-minute breaker. Literally from top to bottom of the move. And then we range for the rest of the day. So that was literally the explosive move for the day of price action. And so, yeah, this again, this will play out very explosive. And these are big moves that you can take advantage of on the lower time frames. They don't come by every day because obviously they need more time and so on. But they're really, really good moves that you definitely should be watching out for. And they can give you, again, a bias for a longer period of time where you're like, okay, that makes sense. That doesn't make sense. That makes sense. That doesn't make sense for me to target. Some of them are going to be easier. Some of them are going to be harder. Like whenever price action is doing this on the higher time frame, where it just moves sideways like this, of course, it's going to be more difficult for you to really utilize this because, again, it's making just a mess. It's ranging on the higher time frame. So you don't use the 4-hour. In this case, you just don't use the 4-hour as heavily. You watch it and you wait to see if something builds up on it. But if nothing builds up, that's okay. Skip it, move on, go to the hourly. See if you see anything else on the hourly that looks more clear. If nothing on the hourly also looks clear, then move on. There's nothing for you to do. You don't have to utilize it every day the same way, but just be aware of it. Be aware of it, about where it's at. For example, here, CISD on this high, right? On Friday, January 24th. CISD, low, high, lower, low, giving us the hourly sweepable. So let's go on the hourly, okay, hourly sweepable. And then let's count. So this is Friday. So 1, 2, 3, 4, 5. Is that 5 on Thursday? Let me see. Okay, so this built at the 1600 candle though. So really it's not built until there's actually a low. So it starts to come from Sunday. Sorry. So the 1, 2, 3, 4, 5. Yeah, so it's on the 5th day. So on this day, once we go above this high, you can start looking for a 15-minute breaker. And do we get a 15-minute breaker? Yes, we do get a 15-minute breaker. Now, it's a lot thicker, obviously, than you would want. So hopefully you had something a little bit better. But it's there. And then what did the projections go to? Projections go to, let's see, 3, 3.5. And then what happens after 3, 3.5? Let's keep the replay. Do we deliver? Do we go up? So we took it out. It took how long to take it out? Let's see, Friday, Monday, Tuesday, Wednesday, Thursday, Friday again. So it took 5 days to take it out again. But, you know, the initial portion, which was a gap down, and this is a gap on the market, almost deliver fully, and then you turn around from there. If something almost delivers fully and turns around from it, either A, will deliver, once it goes back to 2, 2.5, it will fully deliver it, or it's fully reversing. So then you can just switch your buys and go the opposite way. So yeah, anyways, this is basically how I utilize everything. It's not honestly that complicated. Once you start seeing it more often, it's just a matter of doing it over and over and over. I'm not expecting most folks that watch this video to understand it at first. Just going back testing, my honest feedback on this and what I tell everybody is, instead of back testing my model from the 5-minute and the 15-minute perspective, always and only from that perspective, it's go and do the 5-minute, go and do the 15, look at the failing trades, look at the winning trades, but then go to the 1 hour and go to the 4-hour as well and take screenshots of that. And honestly, what I suggest everybody to do is go to the 4-hour, then the 1 hour, then the 15, then the 5, then the 1 minute, because this will give you a top-down view perspective to where, is the 4-hour bullish or bearish? Is the 1 hour bullish or bearish? And so when you get to the 1 minute breakers that you're going to take from the 5-minute sweepables, if they fail, you're not surprised on why they fail. You're going to be able to tell why they fell, because they were going against the 1 minute breakers, were going against the 5-minute trend. The 5-minute breakers were going against the 50-minute trend. The 50-minute were going against the hourly. The hourly was going against the 4-hour, and so on. So the higher time frame will always trump the lower time frame unless we're making a shift on a higher time frame that you just visibly cannot see on the current time frame you're on. But yeah, anyways, that's it for today. That's the lesson. Hopefully you guys enjoyed it. Please give me some feedback. I know I'm going to get a bunch of questions about this. The more you watch the live streams, the more you're going to understand this. This is the part where it's a little bit difficult to teach. Students are honestly struggling with this even 6 months later after I taught them. So, you know, don't feel bad if it just kind of goes over your head. Just keep coming back to it and then watch the live streams. I'm going to be talking about this more often on live streams so you can see basically the process and how I follow it and how I utilize these higher timeframes or sweepables as targets for liquidity.